Hello everyone, welcome to Elliott Wave Forecast.com YouTube channel. This is Henry. Today is Tuesday, December 21st. The time is around 1 a.m. GMT. And today we're going to be looking at the chart of the Russell. This is a 45 minutes chart. So what we have here is you can see this invalidation level at 2279 is labeled as a P with P, okay, in the primary degree here. Then from here we have a select lower, so we got a select in the primary degree lower. Within the select we have a 5 waves subdivision. We can see this with 1 in the intermediate degree ended here. With 1 itself subdivides into another 5 waves, right? And then we have the wave 2 finished here. And then now we are extending to the downside again within the wave 3 of C, right? Within wave 3 of C. And within the wave 3 we subdivide again into another 5 waves. So this is 1 of 3 of C, this is 2 of 3 of C, and then we should be continue to extend on the downside, right? So the idea here is this current rally, the short-term rally here, is expected to fill now in 3 waves as an ABC. Okay, now this can either be as an ABC or it can be a straight up correction and then continue to go down again after a straight up correction. So it doesn't really need to be exactly like what we are showing, but it looks quite reasonable to have something like this ABC here. This one, it does look a little bit of an impulse, so it's quite reasonable to think this is an A only, and then we can get a B and a C before the decline resumes to the downside. Now if we zoom out a little bit and take a look at the daily now. Now let me put the P on the daily time frame. So this is the daily time frame blanks. I'm putting the P where it should appear. Like this is the P in the same position that you see in the 45 minutes chart. Now again, if you see this on the daily time frame, if you understand Elliott wave, you can make sense even if you don't see anything else in the daily time frame. You will know if this is a P, then this got to be in the A. There is nothing else that can be in the A, right? Nowhere else. And now we are looking to see. You can see we have already broken below the A, confirming that this correction is finished since we have already extended on the downside, breaking below the previous low, right? So we got a sequence of lower low here, and the select, ideally, not always, as a guideline, ideally it should be equal to the A. Okay, now a lot of people confuse the guideline with a rule. This is a guideline with higher probability in terms of extension, but it is not a rule. It's not a must, right? It is not, nothing is a must in Elliott wave. A lot of things are not a must. Only very few principles in Elliott wave is sort of an absolute. For example, one absolute rule, for example, is the B. If you want to call it a 1, 2, 3 or ABC, the B cannot break above the beginning of A. Or if you want to call this a 1, then the 2 cannot break above the beginning of the 1, right? I mean, that's common sense, because if it breaks, then you cannot even label it that way anymore, right? But there are only a few rules that is absolute. Everything else is a guideline with higher probability, and sometimes a lot of people confuse rules and guidelines. Okay, so that's why I want to mention about it. So again, guidelines suggest the select ideally should reach at least 100%. So if this continues to go down, we can go all the way to 1956. Now if this turns out to be a bigger sell-off, like instead of A, this is a 1, because remember, an A and a 1 also subdivides in the same 5 waves. So we're labeling it as an A because we are kind of in the bullish scam, right? But then if, let's say if this is a major top, let's say, or a bigger top, a big larger degree top, then this might just be a 1 of A. This could be 1 of A. This could be 2 of A. And then this could be a 3 of A, and then the sell-off can really accelerate to the 1.618 if this is a 3, right? But as a guideline, again, the C, at least the third swing, whether that's with 3 or with C, right, can at least ideally reach 1956. Then from here, this is where the buyers or the bulls have a chance here. And then from here I mean, if this is still bullish, then from here we might get another leg low, another leg higher, make it to new high. All right. Or if we're gonna be doing complex correction, then from here we can get through this rally like this, and then it fails to go to new high and then break down again if it is a double zigzag, let's say. But um, at the least in the shorter cycle, that's a medium term, long term that we are not concerned in this start of the day. What we are concerned about short term. What are we looking at short term? Short term simple. Rally to fail, more downside at least until it hit 1956. All right. So that's the idea here. And as always, we do have 14 days trial. It's only $9.99 if you do want to check our service and get regular updates on indices, forex, commodities. Um, and I'll see you all again. I will be off for the remainder of the week, but someone else is going to help you. I think Eric is going to be doing the chart of the day for the remainder of the week. So happy holiday to all of you, and I'll see you all again next week.